no matter what the economic climate may be,
no matter what,
there is always an investment or an investment strategy that you can deploy and profit through from that economic condition. Today, we're going to be talking about the concept of a all-weather portfolio.
So the all-weather portfolio is a portfolio structure that Ray Dalio actually leverages to gain success in any market environment. In this video, we're going to break those down, discuss each asset within each quadrant, and break down the differences that we would take in that specific portfolio allocation.
And what he means by quadrants, he talks about a number of factors that affect the economic climate and that determines these different triggers that makes him allocate a certain asset or assets to a certain quadrant or section in that portfolio. So we're literally going to talk about all of that. Like he said, we're also going to talk about how crypto fits into an all-weather portfolio, given our opinions, because, this was written about before crypto was ever even and I was bought by any institution anywhere.
So I say let's jump right into it. And guys, remember, it's not financial advice. So don't ever sue us. All right, jumping right into it though. He said he only loves tips. No. Oh, pause.
You guys will see what tips are here in a minute. All right, guys. So he talks about 4 factors that influence the economy, right? So the first one is higher than expected inflation, aka rising prices. The second is lower than expected inflation.
Yeah, so deflation is not really a good thing at all. That's why
it's worse than inflation.
Well, inflation at pretty much every level is kind of good to have, just at a stable, moderate pace. Nothing too crazy. I mean, even Bitcoin has a inflation rate. Ethereum has an inflation. Like everything in terms of monetary system or currency, it's good to have a modest inflation rate. Nothing too crazy like the US dollar. And you don't want prices falling that are denominated in that currency or within that monetary system precipitously either, because that probably means you're in recessionary period that could turn into a depressionary period. I mean, the Great Depression, they experienced deflation. Just remember that.
Yeah, and as a general rule, I would take major inflation over major deflation. And if you look at it,
I'll take Zimbabwe inflation over deflation. No, I'm joking.
Yeah, it's like when you have deflation, that'll hurt the landlord more than the renter. And the landlord is the person who owns the home. Without him, people can't rent it. Maybe the city or the government will buy it and people still get to stay there, but that doesn't always happen. And then for inflation, it's more hurtful to the renters, and everyday people.
Most of the time, housing isn't going to be deflationary. And let's say we are experiencing deflation in consumer goods, which we do most of the time. Housing is still going to be on the inflationary side of things. And we could have deflation, let's say, in services, but housing prices and rents are still going up. So just because we're experiencing deflation in goods and services or any other sector of the economy, that doesn't really pertain to housing, because housing could have its own factors. Like even right now, like if we had such a supply shock during a deflationary time, but we had supply shock in housing and still relatively high demand, then prices would keep moving up. And so there wouldn't be any deflation in home prices. So on the inflation side, I always say it's a good hedge against inflation, a 30-year mortgage. So the instrument attached to the purchase of the property, not really the property itself. It's what's attached to it that makes it so valuable, because you can abstract that and move that. But we covered that in another video on property rights. I feel like we went down a rabbit hole here, so let's continue here with the all-weather portfolio.
Number 3 is higher than expected economic growth. Number 4 is lower than expected economic growth. So, these are my notes from, when he was talking about his all-weather portfolio. So he says if there are 4 potential economic environments or seasons, he says that you should have 25% of your risk in each of these 4 categories or quadrants. This is what we were referring to in the beginning of the video. So let's go through these quadrants and we'll kind of, break it down, why we think he has them in there, and maybe if we disagree or have our own opinions. Obviously, Ray Dalio is coming from the standpoint of managing multi-hundreds of billions of dollars. And, most of us on this video are not. So that's another thing to keep in mind here. So
I'm like a dollar away from that, but yeah, we ain't there yet. Like,
he's telling the truth.
oh my god.
So starting with the first one, in a rising growth environment, he wants stocks, corporate bonds, commodities, and gold. Now, I agree with having stocks in a rising growth environment because, stocks are companies. So that means they're making more money. They're probably most likely contributing to GDP, a rising GDP. And then corporate bonds. So these are companies who are issuing debt. So you probably want to buy debt from companies when there's rising growth because that means the company is doing well. So more people are going to be likely to want to loan money to that company. Commodities, another thing that's used in companies to make products. In a rising growth environment, commodities are needed because the companies need them to make these great products so they can keep contributing to GDP. Now, gold, I personally, another thing you have to factor in is how old are you? Because like they used to say back in the day, whatever your age is, that should be the percentage in your portfolio that you should have in bonds. Now, I wouldn't say that because I'm a crypto guy, so there's other ways to get a yield in crypto. But
I'm
excluded
be
that,
honest, I'm not buying gold in a growth environment. It doesn't make sense where you can get so much appreciation / yield from so many different assets that exist kind of everywhere else. It doesn't make sense to hold gold unless you're expecting a very, very inflationary environment. And still, there are other assets that you could use. But I understand the gold bugs will be like, oh, well, it's a hedge against the currency debasement. Sure, you can use it for that. But I wouldn't buy gold. That's just me.
yeah, gold is normally something I would look at as, more of a hedge or when times aren't as good, not in a rising growth. And there's nothing wrong with holding it. And, not bad to have a certain percentage of your portfolio in gold, but that's not what I'm looking to buy in a rising growth environment.
Yeah, like when I know that we're about to have strong growth over the next like year and a half or 2 years, like the first thing that comes to my mind is not, damn, I should load up on more gold. It doesn't oil my gears up. I don't know if that makes sense. Okay, moving on to the next one. Okay, so the next one is a falling growth environment. So that could be, a negative quarterly GDP. That could be falling or slowing growth, but it doesn't mean negative growth, or it can mean negative growth. Either way, he holds treasury bonds and inflation protected securities. So basically, a full bonded out portfolio. And tips for those of you who don't know, they're treasury inflation protected securities. So the value of those bonds, tip bonds, they move with the changes in CPI, the actual value. The yield provides a nominal yield, and then it provides a real yield. So as you can see here, according to Fred, good old handy Fred, the most recent yield on the 10-year in terms of a real yield is 2.1%, 2.16%. So take it for what it's worth. I'll be honest. Although tips are designed to be protected against inflation and to move with the value of inflation or with the rate of inflation, so that way, no matter what, you're always earning more. You're earning a real yield in inflation adjusted returns. In a deflationary environment, they're not so great. You actually, your value can decline quite substantially. So they're not so good in a deflationary environment, but that's not what he's saying here. But also, deflation could exist in a low to no growth environment. Or this could be even a stagflationary environment if it's just low growth and not negative growth. But it is falling from previous levels and it's therefore low. And so to cap it off, even though they're supposed to protect against inflation, I am not like a huge fan of tips where I'm like, damn, I should buy me some tips right now. I gotta be honest, even if I had $250 billion, maybe, because my entire perspective would be totally different, of course. But in my mind, it's like, shit, there's always just better options than tips, unless you're trying to be like ultra safe, which at 250 billion, hey, you probably are trying to be ultra safe because there's no goddamn point in you trying to make $100 million. And treasury bonds, they are good to hold in a low growth environment because you lock in a yield. And so, yeah, those are good.
Yeah, same. I'm not going to be excited about buying tips. I'll just leave it at that. Treasury bonds, now this one makes more sense because in falling growth, a lot of times you have high interest rates. Maybe the Fed's trying to cool down inflation and, get the economy to cool down. Treasury bonds is good because when you have high interest rates, that means treasury bonds are paying more. Also, institutions and people who are managing most of the money, they take a risk off approach. And when they do that, they normally buy bonds. So you'll have them buying the bonds, which will be increasing the price of the bonds. So I like treasury bonds in a falling growth environment.
If growth is falling, right? So it also depends on like why growth is falling, because then different opportunities may emerge when you take that perspective. And so there could be a time where growth is falling and it makes more sense if we're talking about just long positions, but we want to stay in the market. I guess if you're being an investor who's not like shitting on one class relative to the other, you're just kind of, you go what most makes sense, all things encompassing, getting into a stable coin and earning a yield on a stable coin, probably USDC, in a falling growth environment. I mean, that could make a lot of sense in a falling growth environment, depending on why growth is falling, because that affects different markets in different ways, of course. For example, if growth is falling because the Federal Reserve is raising interest rates, and so they're slowing growth artificially or with brute force through interest rate policy. Well, in that case, if they're not trying to cause a recession, if we know they don't want to put us into a recession, which we know they won't, well, maybe like real estate does really well in that type of environment, in a rising interest rate environment, as we saw in the last rate hike cycle. Because even on the back end of that, when we're going into an easing cycle, it's still going to perform well on top of it performing well in a rising rate environment. And once again, I just laid out that you could buy a stable coin and earn a safe yield on a stable coin. You could go delta neutral in a liquidity pool and, be just fine because you're riding a volatility. And so there are a lot of strategies that you could take on in place of tips that would make sense in a falling growth environment. But once again, that depends on why growth is falling. But anyway, moving on.
All right, so now going on to the right side of the quadrant, the next one is rising inflation. So he wants commodities, gold, and tips again. So in a rising inflation environment, he probably wants commodities because the price of commodities are going up. When inflation's high, that means it's a lot of people, buying things in the markets, right? It's what causes inflation.
It depends if it's supply side or supply put or cost push or demand pull.
It's mainly because it's a lot of money in the system. The Fed probably printed a lot of money, so it's making prices high because everyone's buying everything.
That would be cost push. Demand pull, that means people are buying a lot of shit, and that's why there's just a lot of demand, so prices moving up.
Yeah, so it's just like if inflation is high, interest rates most likely are lower. So you want tips because the yield is going to be higher. And you want commodities because people are probably buying them. Prices are rising. Gold is a hedge against inflation, even though it wasn't the best hedge during this most recent inflation. So, that makes sense.
So I wonder what would happen if you put a chart on inflation next to a gold chart and see even with all the oscillation in inflation and it's slowing down but still moving up, has gold appreciated enough to outpace where we are today in the current inflation rate? I wonder. And then that will tell us if it's beat inflation over the last, let's say, even 3 years. Because, it's been a crazy little 3 years in terms of inflation. So we would know, because I don't know it off the top of my head. But anyway, if somebody wants to piece that together on like a trading view and then just send it to us, be my guest.
Also, in rising inflation, I want stocks, right? Because the prices are probably going up, most likely.
Yeah, I want stocks. I want real estate. Once again, if I see inflation is rising, I'm not going to rush to tips. Pause. All right, so the last quadrant here, in a falling inflation environment, so a disinflationary environment, not necessarily a deflation environment, but a disinflationary environment. And so falling inflation and not deflation.
Kind of like now.
Yeah, like now where we're in a, it could be sticky disinflation, but disinflation nonetheless. Yeah, like now.
Today is June 3rd, 2024.
Yeah, if you're watching this video in 100 years, that'd be crazy. Like, whoa, they had paper? Anyway.
Oh my God.
All right, so in a disinflationary environment, he says he wants treasury bonds and stocks. Now, stocks have been a little weird over the last few years.
I'm wondering why he wants stocks.
Well, because if inflation's falling, that means either the Fed is cutting or whatever. Like, it's probably like something that is bullish for stocks on paper. Because even now, if rates fall, if the Fed starts to ease, that might not be so bullish for stocks this time around. But intuitively, you would think it would be. But there is no intuition in the stock market. So it's like, it is, but it isn't. It's like, you know what I'm saying? It is what it isn't. You just, when you got it, you got it. When you don't, you just don't yet. But it, like, anyway, treasury bonds in a disinflationary environment. If inflation is falling, once again, I'm not rushing to treasury bonds. You know what? This is really constructed like a guy who has hundreds of billions of dollars.
To be honest, this is assuming I don't know jack shit about crypto. I might get into some treasury bonds if I got even a few mil.
No, for sure. But that's if you don't know. I mean, I don't want to sound condescending, but if you don't know anything, then you're just like, yeah, I'm in some U.S. Treasury bonds. Cool. You got your money earning some yield year over year. That's fine. But if you're an investor, which is probably the people watching this video and us, and we're not managing or sitting on billions of dollars, treasury bonds don't make the most sense usually. Just saying.
For a small portion, like right now we have 5% on the short-term treasuries. Now, 5% on a stablecoin single-side staking in crypto, that ain't that bad. So when I think about this, and I don't have to worry about security as much, I'm okay with that with a small portion of my portfolio if I got millions of dollars, multi-millions of dollars, not just a million. So it's just like when you have fallen inflation, rates a lot of times could be high for a while because that's how the Fed got inflation to fall. Now, when I think about stocks, I agree with you. It's like, that's a weird one. But I guess he only has stocks in the top left quadrant. So maybe it's his way of balancing it out. He only has tips in 2 places. He has gold in 2 places. And he has treasury bonds in 2 places. So I just noticed that he did that.
I just think it's always good to buy real estate too in anything you do.
I think this is for like investments that anyone can get a brokerage account for and buy. Probably real estate's a little harder to get. I mean, unless you buy.
If you're buying any of this shit for real, you can afford real estate.
So now let's talk about where we see crypto fitting into these quadrants. For me, I want crypto in rising growth because if stocks are doing well, crypto's gonna be doing well most likely as well. And I want crypto in a rising inflation environment, right? Now, if growth is falling and inflation is falling, that may be a good time to start adding crypto to your portfolio, right? Because prices are dropping. But in a rising growth and rising inflation, you would have already wanted to have it in there so you can experience the growth in terms of price appreciation as growth and inflation are rising, because that's what's going to carry those prices up with them.
So I think USDC fits in all of the quadrants.
Oh yeah, you always want to be in some cash.
Yeah, so, and of course it's not direct cash. And so it's like a level removed. And so it's like crypto M1. Let's say like a crypto M1 or M2, like a deposits. It's deposits basically. So crypto M2. And so stablecoin fits in all of them to me. Because in a rising growth, or whatever it is, you can always earn a yield with your stablecoins. In a rising inflationary environment, you would think crypto would do really well. And so, I think it'd be important to be in those environments. In a rising inflationary environment. In a falling growth environment, that could be bullish for crypto too. But that depends on the scenario. But a rising growth environment, for sure, you want to own some crypto. In a falling or in a disinflationary time, once again, it depends. Why and how are we experiencing this disinflation? Because that could be bullish for crypto because of a narrative that's going on even at a certain time. And so it totally depends. And so this, just when you break it up into four quadrants like this, it seems pretty cut and dry. But then when you start to consider the factors that affects each of these assets and why we would be in these environments in the first place, then it starts to get a little, you could say gray, but I guess it depends on your research and understanding.
Yeah, and also guys, if you don't want to like be this diversified and be this safe and go into these many assets, all-weather portfolio has different modalities within asset classes. Like you can have an all-weather crypto portfolio in the sense that you long and short Bitcoin, you hold some stable coins that you're getting a yield on, and you're holding an asset, and the weight of those change as sentiment changes, right? You can do the same thing with stocks. This is what hedge funds do. They long and short at the same time, aka hedge. That's why it's called a hedge fund, because that's what hedging is. So you can hedge your portfolio while you're in a specific sector. So you can have an all-weather portfolio in a lot of different ways. Yeah, guys, and just to cap it off at the bottom, it says here, the point is not to plan for a specific season or pretend to know what season is coming next. You always want to be prepared ahead of time. Prepare for war, not when your city's getting raided, but when the trees is there and everybody getting shaded and comfortable and ain't worried about a damn thing going on, right? Build a boat when it's dry, not when that flood coming on in. Go and tell them about it.
So yeah, it's probably happening in a place with a lot of trees with some water around is what he's saying right now. But guys, as always, we appreciate you. If you got value from this, give us a like. Don't forget to like. Leave a comment, whether it's laughy faces, angry faces, or even if it's a heart, just to show your love. Leave something below. Make sure you subscribe to the Know It Owls channel. Make sure you subscribe to both of our channels, Crypto Noah and J Mansion. And guys, if you feel so inclined, hit that link in the description and book a free strategy session.
I feel like I should be playing some of that jazz music when he was talking.
Hey, and I ain't even done. And I'll tell you one more thing. You have watched another episode of Know It Owls Information.
This guy.
And I hope you enjoy. We'll see you on the next one.